Hello everyone, good afternoon. Uh, Today I will be giving an update on Bitcoin. I shared an analysis on Bitcoin last month on our YouTube channel right here. Outlook on Bitcoin March 2025. This was shared 1 month ago, and I mentioned about still being bullish on Bitcoin, that we are not yet bearish. We are just having a pullback, like a drawdown, a retracement into an area of demand or the block, or an area of fair value gap. And I also want to make mention of the changes that we've done on our logo. We are trying to keep it simple and professional, so we are taking the previous logo off, and this is our new logo for Domitrons. So back to trading view, and on our chart, this right here is Bitcoin. Alright, so like I said previously, we have maintained a bullish structure. We are still bullish on Bitcoin, and I made mention that as long as this low stays protected, that we are not yet bearish. Alright, because this low is responsible to give us this high. So this is our higher low, and this is our higher high. Now what we have a retracement downwards to give us a higher low to continue the bullish trend. Now I made mention of the fair value gap right here, and I said we are retracing back into the buy side inefficiency to rebalance the price, and then we'll be looking for directional buyers to go bullish. Now it didn't go bullish immediately. We still had a little drawdown during March, and this current month being April, we finally moved. And the interesting part is seeing it haunting their previous month low. Now I made mention of coming to this auto block, but this would be of no interest for the reasons that there is no fair value gap in line with that demand zone. This is the only place where we have an area of inefficiency. Now, to better explain this, we'll be using the range where we are focusing on the external high and external low. This is something that I taught on the YouTube channel, on my Udemy course, SMC algorithm prediction, stuff like that. So what we pay attention is the highest high and the highest low. That is the range that we have to deal with. We are inside that range, so we are dealing inside that range. All right, so when we see a shift, then our eyes goes to where the market wants to go to, which is an external high. All right, so once the structural shift occurs, then we are looking for a perfect entry to go in. Now why also you are marking your highs and lows? If you have to deal with a range like this, you are to use your Fibonacci to mark the high and the low, so that you can know your premium pricing and your discounts. All right, you can actually see how price gave us that low, traced into this discount, right, and then starts to buy. This entry down here, I shared it last year, or was it last 2 years? I shared BTC going bullish from this point, because we have that sweep of sales and liquidity pool right here, and I said we'll be going for this previous 12-month high. That was what we went this is the previous 12-month high. That's what we went to, and we finally go to that external high into premium pricing, right? So now the external high has been taken out, and what we are having right here is a purge on this high. All right, you can actually see how price has been playing around on that high. Now if we have to go bearish, we are expecting it to break a bullish structure. All right, there is a bullish structure responsible to take out an opposing structure or an opposing liquidity, right? So if we have to go bearish, it should break that bullish structure. Now when you go down to your lower time frame, we did not have any bullish structure that this structure broke, because this is our low, this is our high. Price traces backwards into an area of inefficiency in liquidity form, and then finally shift. This is where we had that shift right here. Once we broke this high, and what was responsible for that, we have this demand responsible to break this high. So price trades back into it and we'll go bullish after seeing that failure swing right here. If we go to the weekly time frame, we can actually see here very clean and clear that this is the swing low and this is the swing high. That is the range of a trend or a structure. I don't know why I was like bringing this out. So we take this low to this high, and we now get to see how the price retraces backwards into an area of discount. All right, and we finally go bullish. On your monthly time frame, that area is an area of fair value gap. Price retraces backwards to do what? To fill up inefficiency and give us a swing low. This is a swing low. All right, the candle at the center is lower than the two previous candle, but the left and its right side. So that is identified as a swing low. A swing high is when the center candle is higher than the previous candles by the sides, so it goes lower. Now we finally trace into the inefficiency impulsively. This is what we always get with what we want to see to continue the price movement. We impulsive trade higher, taking out this external high, right? Then what we have to do is take off Fibonacci from the premium, the discount. Price trades into 50% first. All right, that is where we were having that inefficiency, but it did finally trace back deeper into 55%. That is the middle of 60 and 50. We trade into discount, and the front part is seeing it taking that liquidity right here and finally go higher. Now is trading deeper was for the reason to go for that of the weekly 50% weekly fair value gap right there. Trades into it and we go higher. Now there is something I want you guys to understand, or what you should know, is that whenever you see price trading this way, trading in a choppy way without any impulse, imbalances or fair value gap, it tells you that this market is trying to build up liquidity, and once it is done build up liquidity, it is trading into an area of an old block or an area of fair value gap. Once it trades into it, it impulsively trades reverses to take out all of those liquidity that is been printing all this while. You can actually see that we have native highs right here. That is where we have in the buy side liquidity pool. There is a liquidity pool right here. You will not be happy, or you will not be comfortable trading a choppy market like this. Yes, the market has sold, but it's been slow. It didn't do it impulsively. It's been slowing down. It's been wiki choppy, and then it finally reverses. This is not a good place to be. So whenever you're on the market and you see it trading slowly with no impulse, it means that it is losing momentum. All right, it's losing volume, so it's just building up liquidity. So in the weekly time frame, you can actually see right here there was no area of sell side inefficiency, neither was there a bearish trend given to you. Even on the daily time frame, there was no bearish structure. And what I mean by bearish structure is, are you seeing a clean lower low and lower high right here? Look closely, because to me, I don't. What I see here is price consolidating right here. Price impulsively trade lower, trades backwards to fill up the sell side inefficiency, trades lower, not a break the structure, it tends to range again. So looking at this, there was no, what you should take note of what I'm about to say. There was no bearish trend. What I mean by that is there was no lower lows and lower high. The first thing to identify. The second thing is that there was no violation of an opposing trend. What I mean by violation of an opposing trend, to confirm your directional bias, what I mean is that if we are bullish, all right, for us to confirm that we want to go bearish, we want to see a failure high, a failure swing, and then it should violate an opposing trend. violation of opposing trend is meant by it violating that bullish structure. So once you violate that bullish structure, it identifies that this is a change of trend. Another format is when we have a hunt on this high, all right, and then we finally have that structural shift. Structural shift means violating the opposing trend. The opposing trend is violating that bullish trend, so you're confirming you're having a shift of trend. The market is now moving from a bullish trend to a bearish trend, violating every area of higher low, which is area of sell stops. All right, so violating that demand zone that push the price higher. All right, it violates it, so you're having that break of market structure. And this one here is your change of character. Till structural break confirms a strong structural trend, shift of trend. All right, and please, I always repeat this, most of you don't listen. Make your directional bias, your analysis, do it from your higher time frame. Do not start analysis on your lower time frame. You get your bias when you analyze from your higher time frame. Your lower time frame is meant for you to look for that perfect entry to ride the market. Still watching BTC, expecting it to go back to this high to give us a new high. And yeah, that is it for the update on BTC. I know I have been inactive for a long time, been busy with traveling and stuff. Most of you know I do that all the time, most of the time, too busy, but I am still active. I am still watching the market. I am still watching everybody, and like I said, we are trying to build something about Domitrons. We're trying to make Domitrons a better platform where traders comes together to build that community that I've always dreamed of building. So yeah, still working as we improve Domitrons together. And yeah, so that is what we have for BTC today. I don't know when next I'll be uploading on YouTube, but to know more, to perfect your analysis in the market, you should get my course on Udemy. It is available. The link is always on the description of my videos. See you guys next time. Take care and be safe.